Well, let's take a moment of silence for all the individuals in the world who own stocks, because this week was an absolute disaster. Oh my gosh, so we have a lot to get into in today's video, okay? It was bad. I don't care if you own individual stocks, if you have a 401k, if you own index funds, if you own ETFs, it does not matter. You likely got shredded this week. It was an awful week out there. I mean, it's such a bad week that here I am. It's Quiet Jeremy, okay? Quiet Jeremy's doing this video. I got the backwards hat on, okay? If that wasn't bad enough, okay, I was so serious about trying to buy the dip this week that I'm out here throwing poker games. Like, you know a man's struggling when I'm trying to throw poker games to make up some money, okay? So that's essentially what's going on out here, guys. Oh my gosh, hope you enjoyed today's video. As always, got a lot to get into, okay? Awful. S&P 500 was down over 5% this week. NASDAQ was down nearly 6% this week. Ugh. The Dow is down over 4% this week. The Russell had almost a 5% downward move this week. And Mr. VIX was up huge. And generally speaking, if the VIX spikes like that, 12.6% a week, generally speaking, that means the market was down big. And oh my gosh. So yeah, absolute obliteration. I mean, even if you own just something that, let's say, tracks the S&P 500, and let's say you got, I don't know, $100,000 in it or whatever, that's $5,000 plus loss this week, right? I mean, that's a pretty substantial number. The crypto market was a mess this week. Bitcoin was down about 10%. Ethereum's down almost 20% this week. Ugh, okay, it's a mess across the board. Now, some new numbers came out I want to share with you guys here, okay? So, some economic indicators. University of Michigan consumer sentiment, new numbers came out, and we're at 59.5%, so slightly better. I bet you it's only slightly better because gas prices have started to drop a little bit. That's in my opinion. But remember, we're still down at 18.3% on a year-over-year basis, so that's something to keep in mind there. CEO confidence index is in a bad place right now. So it slipped in Q3 from 42, in Q2 to 34. In Q3, 81% of CEOs expect a shallow recession in the next 12 to 18 months. Technically, we're already in recession once again, but whatever, okay. Maybe they're expecting even worse recession. But yeah, that's going on. This is the most telling thing to me this week. This was the biggest news that didn't make news, okay? Atlanta Fed GDP Now. The GDP Now model estimate for real GDP growth, seasonally adjusted annual rate in the third quarter of 2022 is 0.5% on September 15th, down from 1.3% on September 9th, okay? So wait a minute. Now, when you talk about this model's drops like that, could we be in a situation where it goes negative by the end of this month? I don't know. We're going to have to see how this plays out. But I think that's very important and telling, because it's like, are we going to get another quarter of a negative GDP, right? And then if you get 3 quarters in a row of, let's say, negative GDP, how is anybody going to say anything remotely positive about we're not in recession? Like, you know what I mean? Like, it was already a rule that if you had 2 straight quarters of negative GDP, you were in recession. If we get 3 quarters, like, come on, what are they still going to say? Oh, no, we're still not in recession. Come on, man. So I thought that was really, really important. And, that was something that back page stuff this week that I think is very important for everybody to kind of look out there, okay? Real estate is so done, it's not even funny, okay? The 30-year close this week at an average of over 6% now at this point in time. Obviously, home builder confidence is just going to continue to tank, in my opinion, over the next few months. Yeah, it's a bad situation, okay? Real estate is like I said, this is going to be bad for a minimum 6 months. I think there's a possibility of 12 to 18 months of real pain and weakness in the real estate industry, okay? Now, I was watching some CNBC while I was, prepping this video, some fast money, and this gentleman right here was kind of reiterating a point that I see from countless folks in the market. And there's a thought process that basically what he was talking about is we need to revisit where the market was prior to Rona. And in order to bottom this thing, we need to just completely erase all gains that happened from Rona. Now, in order to do that, we need to go back to S&P 500 in the 3,300 range, right? We're in the 3,800 range right now. So we're talking about that would be significant, nasty pain. When we bottomed back in June, that was at like 37 and some change. So if we're talking about 33, that would be nasty, okay? And yeah, all the big dogs would be down big in that sort of situation. Obviously, in order to get the S&P down that much, You need a lot of pain from Apple, Microsoft, all those big dogs to talk about getting the market down there. So we'll see what happens with that. If we were to go down in the NASDAQ to those pre-Rona levels, pre-Rona, we were under 10K for NASDAQ. So we're at 11.4 right now. So that would be quite a significant amount of pain ahead if that was to happen. But, that's just throwing darts at a dartboard in my personal opinion. Could be right, could be wrong. So much is going to be dependent upon how these next earnings reports come out. And obviously FedEx got started in a very bad way, and we'll discuss that in just a moment. But earnings are going to matter in a significant way in terms of the numbers, what the commentary is from these companies, and how bad are things really getting or not, okay? Now, a lot of these big dog stocks are starting to get where we need them. If we're going to even start to think about, bottoming in the next couple months here, a lot of these big dogs are starting to make the moves we really need to see because, in this sort of market crash that we're in, you needed to see pain in everything by the end of it. Couldn't have just been smalls and mids. If we're in a real market crash, everything gets hit. Doesn't matter if you're oil and gas stock. Doesn't matter if you're the biggest big tech companies in the world. You got to have pain for everything and a lot of pain, okay? And I can tell you there's a lot of pain stacking up now in these big dogs. Adobe stock, for instance, is down around 47% year to date. That has, let's say that stock opens, a little negative Monday. I mean, you could be looking at 50% year to date net down on that stock, right? Which is a crazy move. There haven't been many years where Adobe stock went down 50% or more than 50%. So a lot of these big dog stocks are starting to get where we need them. This is a $100+ billion market cap on Adobe there, right? Meta stock, exactly where we need it. The stock has been hit over 50% year to date, almost 57%. You're getting money for free if you're buying Meta, but hey, that's a whole other subject there. Under a $400 billion market cap. Insane, okay? Google McDougal just busted through a new low. Think about this for a moment. Just busted through a new low that's even worse than, where it was at in the June situation, right? So Google McDougal busted through this new low. This stock is down 28.5% year to date. When you start talking about $1 trillion market cap like a Google, potentially going down 30% plus year to date, that's when you're in it, man. That's rough. AMD stock's down nearly 50% year to date, down to $123 billion market cap for AMD. Yeah, I mean, if the market continues to weaken, this baby's just going to keep going down and keep going down. It's getting very close now to setting new lows for the stock this particular year. It's been nasty, okay? NVIDIA stock just busted through new lows again yesterday. NVIDIA stock is down over 56% year to date. I mean, these are the biggest companies in the world. To see these stock prices down 50% plus in a year, I just don't think, I don't think some folks realize how historic of a year this is. This doesn't just happen. This has never happened actually before. We've never had this big of companies falling 50% plus. We just haven't in all of history. In the tech bubble, the tech companies were a joke. You can't even compare the tech bubble to today's companies. Like literally those companies, most of them were pre-revenue or had little minuscule revenues. So you can't even compare it to that time period. 08, 09, I mean, these companies were, nothing compared to what they are today. So this is the first time in history we've ever seen this big of companies that had $600, $700 billion market caps on it, $1 trillion valuations on it, right, fall this much, which is, it's a historic situation. That's all I can say about it. It's very historic, and 2022 is not a year to be forgotten in the stock market. But the one bad thing I'll say about this year is people are going to assume, these sorts of years just happen all the time, and you might not get another 2022 for 10 years, 15 years, 20 years. This is a very let's just call it pile up of a lot of bad stuff, okay? Microsoft's is flirting with getting very close to a new low, okay? This baby's down 27% roughly year to date. Yeah, that just opens negative on Monday. It's likely going to be at a new low for this one. So that's definitely good to see Mr. Softy continue to go down and down and down. Apple's the one thing that scares me still. This bugs me, man. Apple's still at only down 17% year to date. Now, keep in mind, any other year than this year, Apple being down 17% would be a disaster, okay? But in this year, that's nothing. And so I don't feel comfortable with the way Apple's trading still. And if we're going to talk about the indexes going down more over the next few months, I'm so scared with this one. And I understand, supposedly the Pro models are selling well for the new iPhone. that's that initial burst of customers, and we'll have to see if that continues through, right? A lot of the wealthier folks, a lot of the super fans that get a new iPhone every year, those people place their orders in the first month or two. But the problem is it's a 12-month year. So what happens in the other 10, 11 months of this year? Our iPhone's going to sell that strong for the rest of this year. And if they don't, this baby's got to go down more. So this scares the crap out of me. I'll be completely honest with you, okay? Look at this. So NASDAQ 100 stretch of under its 200-day is the longest in more than a decade. So now we're at 113 sessions of the NASDAQ 100 being under its 200-day. I mean, is it possible we could set a new record? Definitely. Definitely. I mean, if the next few months are going to be shaky, that's going to be the situation. It could be, possibly the biggest stretch we've ever seen when it comes to that, okay? FedEx obviously took the cake in terms of the attention day, and that drove the market down huge. If FedEx didn't come out and report what they reported, I think today probably would have been a good day. It was a messy options market out there today. So much going on in regards to that. I wouldn't have been surprised if today actually was a green day, but with the FedEx news and all the scary commentary and the headlines around that, it devastated the market. When you have the FedEx CEO says we're going into a global recession, everybody's going to poop their pants, okay, on Wall Street. And that's exactly what happened. Everybody pooped their pants today and sold everything, okay? And so FedEx was down 21.4%. That's got to be one of the biggest, if not the biggest drop in FedEx's stock's history, okay? That's insane. That stock was down over 21% for this big of a company? Come on, man. And it's, this isn't like this is some tech company or something like that, some super high valuation company. It's a price to sales of 0.44. It usually trades at a PE under 15, somewhere in the 10 to 15 range. And, to sell off 21.4% is insane, literally insane. But that's the market we're in right now. Keep in mind, they missed revenue expectations by 2%. 2%. Sometimes it's good to know the numbers rather than just look at the worrisome commentary, okay? Just something to keep in mind in regards to that one, okay? The housing stocks went up today. I don't know if that was some short squeeze or some weird stuff going on in the options market. Don't trust that rally for a second. Like I said, best case scenario is housing bottoms in like 6 months, but I think it's more realistic is like 12 to 18 months. It's gonna be messy housing market for a while, and so all these stocks, I have no faith in any of them, including Home Depot. Great company, no faith in that one. I don't think people even realize how much Home Depot's numbers have been helped immensely over the last couple of years by the real estate boom. When you understand like how many trades have to buy things from Home Depot to build homes, right? Then you think about the component of everybody's home was increasing in price. So when people's homes are increasing in price, they want to spend on their home. They're like, oh, let's paint it. Oh, let's do some new stuff in the backyard. Oh, let's do this and do that. Because they're like, oh, it's an investment. People stop looking at it as an expense. When their home price is just going up and up, they're not looking at it as an expense anymore. They're looking at it as an investment, okay? Now, that's no longer going on. People's home values are starting to drop, and likely going to continue to get much worse over the coming months, okay? So all of a sudden, folks that are already very unconfident, right, which is something we see in the consumer confidence index, and their home value continues to drop. Do you think they also want to go spend $3,000, $5,000, $10,000 at Home Depot? No, okay, and that's something we obviously saw play out in the great financial crisis, right? Where people stop putting money in their homes. Like, why are you going to put any money in your home when your value just keeps going down and down and down? No one wants to do that, unless you absolutely have to. And something broke in your house, your faucet broke, and you have to go get a new faucet. So you're going to go to Lowe's or Home Depot to do that, right? But outside of those situations, people cut back massively, and so 2023. I do not think Home Depot's numbers are going to be good in 2023. I think their EPS is going to be down. I think their revenue is going to be down. I don't think 2023 is going to be a pretty year for Home Depot specifically, and anything in relation to housing. I don't care if you're talking the Toll Brothers or the Pulte Homes or the KB Homes or the RH, which is high-end furniture, anything in relation to that. No. It ain't going to be good, okay? That's all I got to say about that. That's just the bottom line there, okay? Now, I have always said this year you got to be ready to fight this entire year. And I've said that in countless videos. It's a 12-round fight. Let's not kid ourselves. And that's exactly what you got to be ready to do. And how do you fight? You buy the dang dip, okay? And in this situation, is it possible we could start having a rally at some point in November and into the year end? It's definitely a possibility. We see that play out many times. You get the Santa Claus rally. Also, we're in a election year, which in these kind of midterm cycles, historically, you start getting a nice rally in like mid-November and throughout basically all of the rest of November from there and then into December. So it's definitely a possibility, but I'm not counting on that. I'm prepared to fight this fight all the way till the end of this year. This is a very historic year. I look at this year as a little bit of like a 2008 type year. Obviously, very different situation than '08, right? '08 was banks were failing left and right. The real estate got really ugly really fast, because of we don't need to get into that whole story. If you study that over time, you can figure that out. Okay, this is a whole different dynamic we're dealing with. We're dealing with inflation. We're dealing with the Fed working against the market. We're dealing with energy prices that skyrocketed, commodity prices that had skyrocketed. They've all come down massively and will continue to come down massively as long as the economy continues to weaken. But yeah, it's a different dynamic this year, but it's very similar to like an '08 in terms of you got to be ready to fight the whole year. '08, you had to pretty much fight till the end, essentially. And then into early '09, the market dipped again, essentially. And a few of the indexes hit new lows in like February, March of '09, while, some indexes, like for instance, the NASDAQ, hit a higher low. So they did not... They didn't quite reach the new lows. But yeah, it's a very similar year to '08 where you just got to be ready to fight this thing all the way through. Don't get your hopes up. Don't even get your hopes up about the midterm rallies. Maybe it happens. Maybe a Santa Claus rally happens, but don't get your hopes up about it. Just be ready to buy for the rest of this year and just be mentally prepared for the market to just continue to go down. It might not happen, but just be mentally prepared there. If you're mentally prepared for that, right? No different than, if you're going into a boxing match, you don't want to be mentally prepared like, I'm going to knock the opponent out in the first round, because then when that doesn't happen and the fight keeps going on, you aren't mentally prepared for that, right? You got to be ready to fight every round, okay? Now, next thought I want to give to everybody that I think is very important, okay? Because in these periods of markets go down, a huge week down this week when you're talking about S&P 500, NASDAQ down 5-ish, 6% in a week, everything's going to look like it's the end of the world, right? Everybody's going to be talking about these stocks are going to go down forever and ever, and they're going to throw out any numbers out there, and it's a very scary time to invest as an investor in this sort of market, okay? There's no doubt about that, and the narrative, the bearishness is not going to fix itself this year. Next year is a whole different situation, but this year, for the next few months, we're in it, man. We're in it. It's the hurricane that's going on, okay? But as a long in the market, as somebody that continues to buy in, right, when the market continues to tank, which you're going to get a lot of trash talked. When the market's going down and you're buying stocks, you can get a lot of trash talk to you, right, about why you're buying these stocks. They just keep going down and down and down. Because that's what happens in a market crash, right? But we know, don't try to time the market, right? If we see a stock that's at a great price, we've got to take advantage of that. And, if the stock goes down more a few weeks from now, we'll buy more shares. And if it's down more the next month, we'll buy more shares, right? Continue to add month after month after month, more stocks, more ownership of underlying companies, okay? But yeah, everybody's going to talk like it's the end of the world for, the rest of this year, essentially, okay? But I think it's important to back up as a long in the market, right? And think about just the past 50 years in the stock market, right? Every single time the market had a year where it crashed, collapsed, whatever you want to call it, okay? Every single time you made out like a bandit if you were buying over the past 50 years. And, over the past 50 years, keep in mind, the numbers got so big over the years that these don't even really show up. It's just blips on the radar, these crashes over the years. But, they were nasty, okay? In the 70s, 80s, all this different situations. In 87, there was the biggest one-day stock market crash in history. Look at that. It's just a blip on the radar now. Think about that for a moment. This was the worst day in stock market history. What I'm showing you right there, okay? Think about this. The worst day ever. A day you couldn't even imagine. Stocks tanking 30, 40, 50% in a day. Can't even imagine this situation. Now it's nothing. Absolutely nothing. So is this a one time that if you're buying in a year like this year, right, as stocks tank across the board, is this the one year where this never plays out and you aren't going to be happy in a few years from now? Or is this a situation where, 3 years out, 5 years out, maybe sooner than that, you're going to be a very happy camper? Well, I'm going to go on history side, and I'm going to say, yeah, in a massive crash year, it's going to be like all the others, and in a matter of a few years, you're going to be a very happy camper that you were buying, and you didn't buy into the ultra fear and that, stocks are just going to go down for all of eternity, okay? And I know this is hard for people to fathom right now because we're in it, right? And you see the numbers, but keep in mind, this crash we're in right now in 2022, okay? This will just be another blip on the radar. Think about this for a moment, right? The craziest crashes in history are all just blips on the radar now. As time ticks on, the tech bubble crash is just going to end up being a blip on the radar. The 08-09 financial crisis, dramatic time where we almost lost the entire financial system, right? That's going to end up just being a blip on the radar. The 2020 crash will end up just being a blip on the radar. This crash we're going through right now will just end up being a blip on the radar. So sometimes I think it's good to just step back a bit and think about this logically and be like, oh gosh, man, I'm getting fear-mongered here, but at the end of the day, I wish, my parents were buying stocks back in 87. Jeez, they would have made a whole lot of money for themselves. That's all I got to say. I wish they were buying stocks back in 02, 03. I wish they were buying stocks in the great financial crisis, right? Because they would have made crazy money, just bottom line. And that's how it always plays out. So is this the one time that's different? And we just go down for all of eternity? Or is this just going to be another situation where if you were a buyer, you made stupid money? I'm going to go on history side, and I'm going to say, you know what? I think this is just another one of those situations where you're buying in a crash, you're going to make tons of money, and in a couple of years, you're going to look back and be like, yeah, thank you. It's the way it always plays out. Why would it be different? I don't know. Just something to kind of think about there, some perspective I like to give. And remember, it's always darkest before the dawn, as they say. Hope you guys enjoyed today's video. I appreciate you joining me. Much love as always. Hope you got some good value out of this. Also, if you're looking to join my private stock group this upcoming week, that will be the pinned comment down there. Basically, you get access to the Discord chat with myself and all the other investors inside the Discord chat. You get access to our weekly investor report. You get access to all the popular chats like the Palantir, the SoFi, Meta, Tesla, all those ones, the chef. You also get access to all the different course curriculums I have, which is a lot of different course curriculums. So yeah, if you're looking to join us in there this week, check out pinned comment down there and apply to join us in there. Much love as always, and have a great day.